This is Daybreak Asia, just taking a look at some data points coming out. This is the Jibun Bank Japan PMI figures. Manufacturing, we're seeing an improvement from the prior reading coming in at 49.9, so very close to that 50 threshold that's seen as expansionary. Composite reading as well, an improvement here, so 52.6, the prior reading 51.7, and services, little change from the month prior, but 54.6, it was 54.1 in the March reading. These are the preliminary figures for April, of course, but it does tell us that story that manufacturing sentiment is improving or continuing to improve in Japan. What you're seeing there in terms of the dollar-yen trade, it's fairly steady right now. We have seen that Japanese yen holding very close to that 155 mark. It's really that story of the yield differential between the BOJ and the Fed, unlikely to be improved this week given the BOJ very much expected to stay on hold. But let's shift now, take a look at Asian FX more broadly. In the session today so far, what we're seeing is little movement. The dollar gauge fairly flat right now. But the story of this year so far for the dollar is that it's just a force that we really didn't bet on. A strong dollar is back, and it very much looks set to stay. So let's discuss with our next guest, who says vulnerability for Asian currencies is increasing. With us now is Trang Thuy Le, macro and FX strategist at Macquarie Group. And Trang, perhaps something we didn't expect coming into this year was just the greenback being so strong.
Yes, exactly, and thanks for having me on the show. I think for this year, the strength of U.S. economy continues to beat expectations. And so at the start of the year, when the market was able to price in aggressive Fed cuts, we've now down to more than 1.5 cuts only. And our view is that we would only have one cut this year in December. And that means that, U.S. yields, as you said, going to be higher for longer. And that means for dollar Asia, we continues to be in a very challenging environment.
And is that a trend that you think will worsen perhaps going into the second half? What's your outlook?
Well, I think for right now, where we are in second quarter, it's a very vulnerable period. And the reason I said that is because second quarter typically see a very negative FX flow. So quite a number of Asia countries, including India, Indonesia, and Thailand, have negative current account seasonality this quarter. And when you throw in the backdrop of hawkish Fed, geopolitical risk, and potentially another increase in the dollar CNY fixing over the coming period, I think that really means that you may not have seen the worst, and things may get worse before it get better.
Yeah, let's talk a little bit more about that fixing. How far do you think the PBOC might be willing to let the yuan depreciate, and what could be the knock-on effects of that?
Yeah, so it's been a key question this year. I think really the RMB holds the key to how bad Asia sentiment would get. If we have the PBOC holding the fix largely steady around current level like 710, I think that would help Asia central banks. But unfortunately, we think a move higher in the fix is more likely. And the reason for it is that if you look at the China basket, the CFETs, it has gone up about 3.4% year to date. So I think that provides a policy room for the PBOC to raise dollar CNY without compromising its FX stability mandate, in the sense that they could always measure it against a broader basket. So my view is we get the dollar CNY fixed to about 714 in second quarter, and with that move, then dollar CNH could touch 730. So that's the level that I think once it filters through the rest of Asia, it could cause another leg of Asia FX sell-off.
Yeah, that's an interesting point you make, because so much of the focus is usually on the yuan US dollar. But to your point, we have a chart on the Bloomberg terminal that illustrates this. The yuan versus the basket of peers, it's the highest it's been in about 17 months. As pretty much all of Asia weakens against the US dollar. So going forward, how do you see the yuan performing against its regional peers?
Yeah, so I think there would be some downside to the CFET's basket when the PBOC start to raise dollar CNY fix more meaningfully in the direction we predict. However, it will not see aggressive downside to CFET's because at the end of the day, in a strong dollar environment, dollar RMB tends to inch in the same direction as well. Having said that, I think the fact that China economy recovery is still slow, they still rely a lot on exports. So I think that means that they would prefer a somewhat weaker currency level from here, definitely against the basket.
What about the moves that we're seeing in the oil space? Because, of course, it's been that story of resurgent oil on the back of Middle East risks. Those do appear contained for now, but there's still a chance that oil does move higher. So how is that going to also affect the dynamic?
Yeah, so I think it's quite interesting because across EM Asia, we have some net energy exporter, energy and gas exporter, like, for example, Malaysia ringgit. However, when you see oil move higher on the back of supply shock, like what we are seeing recently, then across EM Asia, dollar Asia just move a lot higher. And I think it reflects the concerns around inflation filter through to our region. But more importantly, it also a reflection of the fact that the dollar itself is an important petrol currency. And so when oil price strengthen on the back of supply shock like this, the market feels that Fed can get more hawkish. And on the back of that, US yields rise and that filter through and move dollar Asia broadly higher, regardless of whether you are net oil importers or exporters.
Yeah, we do have the ringgit starting to approach that 26-year low, but I want to talk about Malaysia's neighbour, Indonesia, as well. We've got a Bank of Indonesia decision coming up on Wednesday. Intervention hasn't really done much to halt the slide in the rupiah. Do you expect Bank Indonesia is going to do something to put a floor under the currency?
Well, I think they definitely will try. I guess, at the start when I say it's hard for us to say with confidence that the worst is over for dollar Asia. However, at the same time, I would say when it comes to the rupiah, what we can say is that the pace of the sell-off from here will probably slow because of increased Bank Indonesia resistance. I think this week meeting is definitely live. And not only would they decide whether to hike or not, I think they would go a step further to discuss whether 25 basis point would be enough or they would have to do more. My base case is that they settle with a 25 basis point hike to the policy rate. However, at the same time, they are likely to jack up the SRBI yields as well, so de facto tightening liquidity on that front. So I think the combinations of interventions, interest rate highs would help to slow the rupiah decline. But as you said, the deciding factor for us is really the direction of the dollar and commodity prices. And right now, I think we still need to be in that wait-and-see mode.
All right, Trang Thuy Le, for macro and FX strategist at Macquarie Group. Thanks so much for joining us. Okay, let's take a look at how markets are tracking here in the Asia Pacific. It's looking like another reasonable day for equities at the moment. Here in Australia, we're better by about 0.6%. And if we take a look at how the market is performing by sector, the rally for a second day, pretty broad-based. It's really only utilities and industrials that are suffering here. Elsewhere, we've got the Nikkei having another good day, better by 0.5%. The Kospi following on from yesterday's gains as well, with another modest rise. And of course, this follows on from a pretty decent day for US stocks as well. Let's take a look at how we're doing in the commodity space also. Even though we've seen tensions easing in the Middle East, we do have Brent rising. It started off the day at $87 even, and now we're up at $87.41. New York crude rising as well. A bit of focus on gold today as well. That rally holding on by its fingernails at the moment, but that is our Bloomberg question of the day, in fact, whether or not gold is in a correction and we're done, or whether or not there's another leg higher to go. Some of our guests today think that maybe gold could pull back below that $2,300 an ounce level. Bell.
Yeah, Paul, it's really just perhaps it comes down to what we see in the Middle East and whether those risks of an all-out war are contained. They do appear to be for now, and that's really playing out the dynamic as well. But certainly the geopolitical stories we're tracking this morning, the Israeli military intelligence chief has quit for failing to prevent the October 7 invasion by Hamas. Aharon Haliva is the first senior Israeli official to step down over the assault that killed around 1,200 people. He accepted blame shortly after the Hamas attacks, but stayed in his role as Israel launched its war in Gaza. The EU has agreed to impose new sanctions on Iran over its attack on Israel. The deal will further expand restrictions already imposed for supplying Russia with drones. The measures also target weapons transfers to Iranian proxies in the Middle East, including Hezbollah. Countries including Germany and Sweden are pushing to add Iran's Islamic Revolutionary Guard Corps to the EU's terrorism list. President Biden has told his Ukrainian counterpart that the US will move quickly to deliver weapons if the Senate votes this week to approve an aid package. In a phone call, Biden told Volodymyr Zelensky the US aims to swiftly ship the battlefield and air defense equipment. Meanwhile, the UK is sending more missiles to Ukraine, including long-range guided weapons, in a package worth $620 million. And remember that Bloomberg users can interact with the charts shown using GTV Go. You can browse recent charts featured on Bloomberg TV to catch up on key analysis and as well save charts for future reference. This is Bloomberg. Bloomberg's learned that over a dozen Japan rates traders have left banks for hedge funds. That's amid bets that the BOJ's move to unwind stimulus will create a volatility-fueled boom. For more, let's bring in our Asia investing reporter Lisa Du in Tokyo. And this is one of the really interesting sort of knock-on effects of Japan moving toward policy normalization. But certainly this is something that could really reshape the market as well.
Yes, certainly. If you are a rates trader in Japan these days, you're probably very busy with both work and taking calls from headhunters and recruiters that want to hire you away. Like you mentioned, we've identified more than a dozen traders that in the past year or so have shifted from Wall Street banks like Morgan Stanley and Citigroup, as well as Japanese mega banks, and moved on to work at hedge funds that are all trying to get a piece of the action in Japan. Like you said, the Bank of Japan for years had this yield curve control policy as part of its stimulus that really put a lid on government bond yields. Now that they've done away with that policy earlier this year, it's created this volatility that funds can trade and make money off of. Some of the funds we've identified being very active in hiring are Millennium, Blue Crest, and Capella here in Japan.
So anecdotally, I mean, what are we hearing from people who are trying to hire traders? Is there a shortage of staff, and what's it meaning for salaries?
Yes, the competitive landscape here is it's very competitive here because the talent pool is very, very limited. Because of the BOJ's yield curve control, this has really been a very sleepy corner of the financial markets here in Japan. And it was very basically the talent pipeline is very limited. So some headhunters and recruiters estimate that there's probably less than 100 of these traders at big banks that funds can hire, and probably an even smaller portion of them would have that risk appetite to want to shift from a very stable job at a mega bank or a big bank to work at a hedge fund. Of course, because this is a financial industry we're talking about, they are not being shy about dangling incentives. We've heard that many banks are really boosting bonuses for their traders, even though it's not been a great year for them. But at the same time, on the hedge fund side, they do guarantee a much bigger payout of the profits you make for them. So basically, this is going to be a very active hiring space going forward for people to watch.
Yeah, just crunch the numbers for us. How much more can you get from a hedge fund in terms of profit sharing, for instance?
Yeah, I mean, the numbers really vary, but kind of the headline number that headhunters like to reference is that basically you're a trader at a bank, you're usually taking home about 3% of the profits you make, but Alternatively, compared to a hedge fund, you're probably taking 20% or more of the profits you make. So the difference in salary is substantial.
All right, Asia investing reporter Lisa Du there in Tokyo. Here are some of the latest corporate stories that we're following. Chinese wealth manager Noah Holdings is planning to beef up the number of managers it has in Hong Kong and Singapore. The company's chief financial officer says it wants to have about 150 to 200 managers in the financial hubs by the end of the year, and that is up from the current 100. The private bank is expanding overseas as China's rich look to diversify their wealth. Japan's Fair Trade Commission says Google used tactics that limited Yahoo Japan's ability to compete in targeted search ads. The antitrust regulator says the company blocked Yahoo Japan from accessing technology needed to receive targeted ad revenue from searches on mobile devices between the years of 2015 and 2022. The FTC says Google changed its conduct as soon as they flagged the practice and has promised to give Yahoo Japan access to the tech. Saudi Aramco has started talks to buy a 10% stake in China's Hangli Petrochemical. The state-owned company has signed an initial agreement to explore a potential transaction. No financial details or a timeline were provided. Aramco is seeking more deals in Asia to expand its business and secure long-term buyers for its crude. The Singapore Exchange is proposing a rule change to make it easier for some shareholders to call special general meetings. Under the proposal, companies must take steps within 3 weeks to hold a meeting if shareholders with at least 10% of paid-up stock call for one. This is the latest move in an ongoing push to improve corporate governance in Singapore in response to rising shareholder activism. Still to come, bubble tea maker Cha Baidu is Hong Kong's biggest IPO offering this year. We're going to preview their debut up next. This is Bloomberg.
Taking a quick look at futures here, you've got US stocks fairly steady right now, but the open in Taiwan just about 10 minutes away and pointing to some gains there. China futures also looking a little bit firmer here. Something to note is we actually just had UBS pushing through an upgrade for China and Hong Kong equities to overweight. They've actually downgraded Taiwan and Korea stocks to neutral. So a bit of a shift in sentiment here where we are just starting to see green shoots. Investors are coming back into mainland stocks. But let's take a look at what's going to be a pretty big test as well for Hong Kong today, because it's been a very thin IPO market, not a great timeline or outlook really, but the bubble tea maker known as Chai Bao has declined in grey market trading ahead of its debut on the Hong Kong Stock Exchange. For more, let's bring in equity capital markets reporter Felipe Pacheco. And Felipe, just talk us through the background for this IPO, but also what we're going to expect at the open, because as we said, grey market trading, it's not looking too pretty.
That's right. Well, it should be a very interesting start today. This is the biggest IPO in Hong Kong since November, but we're still talking about $330 million US dollars. As you mentioned, this is a very thin IPO market at this moment. This IPO was quite peculiar because it was flagged for a while. The company decided to come to market with a deal that's actually smaller than initially expected back in time, but it went through, and they managed to go all the way through closing the books. But there was not a price range, so it was always with a fixed price of $17.50. That's the level that the stock is starting today. But as you mentioned, great market yesterday was a great indication of what we should see as soon as the stock starts trading, and the performance was not good. It was down. The shares were down over 13%, so it wouldn't be surprising to see some pressure as soon as the stock starts trading in half an hour or so.
Felipe, even though there seems to be a bit of a lack of enthusiasm among grey market traders, is it possible we'll see some more bubble tea companies coming to the market? How's the pipeline looking?
Paul, it's very fair to say that a lot of companies will be looking at this IPO, not just because of the size. It's quite meaningful considering the context in Hong Kong right now. It wouldn't be the case 2 years ago, but nowadays 300 million US dollars is quite a significant amount. And of course, you have competitors, you have other T-bubble companies that are looking at the Hong Kong market that have started the process to actually sell their shares. We're talking about Mixway Group that's been out there talking to banks for a while now. There's another company called Sexy T, which is actually expecting to list their shares here in Hong Kong as well. So we do have competitors, and we have the broader potential Chinese companies that are expecting to list in Hong Kong that will be checking the performance. As of now, it's very hard to say that whether we will have a positive day or not.
Yeah, and I'm very curious about selling shares at 17.50 a piece Hong Kong dollars. Is that something we typically see where we don't get a marketed range? And what would be the lesson from that for other companies that are looking to list here possibly?
That's a very good point, Val, because usually we do have a range. And sometimes when the market is not good, if they price at the bottom of the range or even below, which is rare, but it can happen, it's a very negative indication of sentiment and appetite overall. When you come with a fixed price, it's easier for you to actually crave what's the valuation that the company is seeking, and then what bankers should be quite confident that they would be able to get to that point, probably after having a lot of conversation, a lot of chats with investors and with the company willing to come at that market value. When you have the range, if you actually sell at the top and then you have a pop after the debut, that's a very good indication. There is appetite, there is demand. Well, the opposite, when you come at a very confident price level and then you have a very sharp decline, it's an indication of pessimism for sure.
All right, all about the price discovery. That was our equity capital markets reporter, Felipe Pacheco, there ahead of what is going to be a key test for Hong Kong's IPO market later this morning. But time to check on some of the stocks to watch. Of course, when markets do open in Hong Kong and mainland China here, we're going to be keeping an eye on Asian Tesla supplies. Of course, the EV maker set to report its first quarter results. That's after cutting the price of its cars in key markets, including China. We have seen that slide for Tesla down more than 40% this year. Asian miners as well, they may move as gold takes a tumble. Haven demand easing with tensions in the Middle East also appearing to be a little bit contained for now. What we're seeing in the broader market so far, just about an hour into the session, and it's looking fairly mixed at this point in time, not really seeing outsized moves. So it does perhaps point to the number of tests we've got ahead. We've got a number of key bond auctions that are coming up, set to test investor appetite, and also key earnings that are on the docket as well. We mentioned Tesla, but there's a number of so-called Magnificent Seven names that are due to report. So we'll get more on that, of course, these different themes coming up in the next hour. Saxo's chief China strategist tells us how the upcoming US election is shaping up mainland equities and the yuan, of course. That is it from Daybreak Asia. Our markets coverage continues as we look ahead to the start of trade in Hong Kong, Shanghai and Shenzhen. The China show is next. This is Bloomberg.